Bitcoin has seen a record 7 straight weeks of losses at this point, meaning it's now 55% below its November peak. But while a lot of investors have swum for shore, the big money whales are still out there filling themselves up on that OG crypto. So let's take a look at whether you too should follow them. Firstly, how do we know that the whales have been buying? Let's take a look at this chart from Glassnode, which shows how many Bitcoin wallets hold more than 10,000 coins that is currently valued at roughly $300 million. The orange line represents wallets with more than 10,000 Bitcoins and the black line represents the price of Bitcoin itself. The chart shows that there are currently 94 wallets, which is up from 84 in mid-February, and over the same period Bitcoin's price has been nearly in free fall, reaching $25,000 in May. This means they are buying the dip. There have been similar whale sightings before, namely during the 2018 crypto bear market and when Bitcoin was down with COVID in March 2020. However, the whales don't always get it right. As you can see in the same chart, they have also bought in during the peaks of July 2019 when Bitcoin's price was roughly at $14,000 and November last year at $69,000. So the question is, are the whales going to be right this time? Let's look at these 3 indicators to get a better understanding. Fear, longevity, and leverage. They're a great place to start. And let's look at each of them to see if the whales might be headed in the right direction. Number 1. The Crypto Fear and Greed Index is pointing towards fear. The Crypto Fear and Greed Index can give you a good indication of the overall crypto market sentiment. Its values ranges from 0, which is extreme fear, to 100, extreme greed. It's based on the logic that excessive fear tends to drive down prices and too much greed tends to have the opposite effect. At the time of shooting this video, it's at 13, around the range of the COVID crash when it was 11, and during the 2018 low it was 9. This next chart I've got for you tracks Bitcoin's price, with each color of the dot showing the level of fear, red dots, or greed, green dots. You can see here how major Bitcoin bottoms have been formed on extreme fear in the past. That said, there have also been times when extreme fear has lasted a good while, with the price still going lower in some cases before the investors turn greedy once again. Number 2. Long-term holders are holding. The next chart shows the number of Bitcoin wallet addresses that have been inactive for a year or more, holding the same amount of Bitcoin all the while. The orange line shows that a record 65% of all Bitcoin hasn't moved for over a year. In fact, this number has increased by a couple of percentage points during the most recent dip. In other words, long-term holders aren't selling their Bitcoin right now despite the fearful sentiment in the market. That could only mean they've got even more conviction than ever before. Number 3. Leverage traders have been flushed out of the market for now. As you may probably know, many Bitcoin traders use leverage to boost their exposure to the asset's volatility. Leverage positions are used so that traders can easily magnify the size of their gains when they get it right. But when they get it wrong, they can really lose massively. After massive market drops, you'll want to see a leverage reset, which means no one is speculating about the prices, and hence the market is purely determined by the credibility of the asset. This chart shows a big drop in open interest, that is the volume of leverage positions open, in purple. While this can certainly go lower, it's a good sign, at least for now, that a lot of the leverage has been flushed out of the system. So what's my take on this? Should you be following the whales and buying the dip? The data does suggest that the largest whales are buying the fear right now. In the past, that's been a good indication to get back into the market. It shows more times they have got it right than wrong in the recent history. But if Bitcoin is forming a major low here, it's likely to take some time for the dust to settle. Don't be surprised if a price does come back down to retest its current low, or even dip slightly lower a few times while that happens. Apart from the COVID drop, Bitcoin has tended to bottom out slowly in the past. Gradually, dollar cost averaging into Bitcoin around these levels could pay off in the long run. If the whales are wrong, you'll have the option to buy in at a cheaper price later on. But if they're right, you'll be swimming in their slipstream to Bitcoin's next peak.